And now for the AVID Investors Club market update. What is going on with the market? I know you guys always come here and want to hear all about that. Well, I'm going to help tell you. In general, Idaho has typically been known as a landlord-friendly state in terms of the laws that we have. Somewhat recently, legislation has passed that has reinforced that landlord-friendly nature that Idaho has, supporting property rights and limiting legislation on rents or short-term rentals. Additionally, lenders and cash-on-cash returns are incentivizing higher down payments. Right now, the name of the game in the market is higher down payments, 40% or so. Why? Cash flow and interest rates. We'll show you more. Supply has made a headway over demand in the market lately. The laws of supply and demand have constantly come up in the conversation about real estate and what is going on, and supply is catching up, making headway. Rents are down. It's cooled seasonally, and interest rates jumped the gun on softening up and decreasing, even before that big announcement that they were recently talking about. And so there was very little thunder to that announcement in terms of when it actually came, because they jumped the gun on that. That's what's going on in the market. Now let's delve in. Dave Rusk is a lender with Idaho Central Credit Union, and he helps share some of the info on what rates are doing. So a primary loan, 30-year fixed, you're moving into it, 6.375% is your rate. Investment rates are going to be with 25% down, which is your minimum usually on an investment, a half a point higher, 6.875, unless you put 40% down. Then they're back a half a percentage lower to the same rate as what you'd be buying a single family home with. Not bad. Two to four units, a little bit higher, as shown on the slide. But again, 40% down gets you that same rate as a single family home. Now, the market and the rates bounce whenever there's an update discussed. And the best indicator of what rates are going to do is the 10-year treasury yield. So when we look at this graph, while it's not a graph of interest rates specifically, it is a graph of the 10-year treasury yield, which is directly impacting interest rates. And so here you can see that they went down and then they went up and then they went, well, you can see what they did. Nationally speaking, Rusk's rates with Idaho Central Credit Union are somewhat on par. We're just saying things are in, they start with a 6. They're close to a 6. They're in the mid 6s. That's what's going on with mortgage rates right now, practically speaking. We've heard a lot about inflation and the story that's telling in our market. And I found this to be housing related and interesting, so I threw it in here. When talking about inflation, they're talking about the CPI, the Consumer Price Index. And Home Street Bank was saying one of the biggest challenges for the Fed in bringing down inflation has been the persistently high shelter costs, which are up 4.9%, almost 5% year over year. So part of the overall stories that are in play affecting the economy, which is affecting the interest rates and the inflation and all that, is the high cost of housing. So it's below the peak that it was in September 22, but it's up higher than it was forecasted to be this month. So bringing it back into Idaho, where are we? What's going on with the market? Well, we've talked about rates, we've talked about inflation. Single family homes are pretty much flatline in price year over year in Ada County, but everything else is up. Inventory is up, which affects supply and demand. Days on market is up, and actually the number of homes sold is up. Canyon County, the prices are actually up a little bit and the homes sold are up a little bit, but the days on market and the inventory is what's up a lot. The homes sold were up, 4%. And we've seen a lot of great attention to Canyon County with that median price of homes being $425-ish compared to $535. There's just a big jump in that median price of homes when you move into Ada County. And perhaps that's why we've just seen a lot of folks moving in that way. We're including a commercial slide this time. Commercially speaking, vacancy is up, supply is up, and absorption is down in all categories except for retail. So retail's crushing it. Maybe it's kind of kicking back into gear after, I don't know, after pandemic where retail was really slow. Not sure, but vacancy's up, supply is up, but absorption is doing better and all of it's doing better in retail. Duplexes and fourplexes. How many people have a duplex or fourplex in their portfolio here? A lot of us. A lot of us. Well, the inventory in terms of purchases and sales decreased again. It's been all over the place. We've had months with 0 fourplex sales, months with 10 fourplex sales, back to back. Tony Dross has been tracking fourplex data every month for a decade or more. Anyway, this is your duplex and fourplex data, and it's no different. There's a lot of variability in what we're seeing, but pending deals increased, inventory decreased, sales increased from 8 to 20, and absorption levels are just all over. So we don't have super clear indicators of direction, but overall, the market has been somewhat neither hot, 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 or cold, cold, cold. It's been doing its own thing based on individual properties. So if you're considering selling something or considering buying something, you can do good either way. So no sales in August or September, or no fourplex sales in August. So September, we witnessed a surge in activity for fourplexes and had the highest sales volume since 2019. And then this month, 10 fourplexes were sold. Well, that was September where 10 fourplexes were sold. So stumble there, sorry. But anyway, the gross rent multiplier is down and cap rates are up. That's interesting to me. They're both measurements of return on investment. One of them is saying up and one of them is saying down. Kind of weird, isn't it?
That's the way it's supposed to be. When cap rates go up, the value goes down.
Okay.
They're up.
Okay. Thank you. So we've got limited data, but the average rental rate is somewhere around 1.34 per square foot. Here is what this looks like on average pricing. September average price of fourplexes in Ada County was only $844,000. Not a bad time to pick up a fourplex. That's what that tells me. In terms of compared to what we've been seeing lately, even though it's overall trending up. Average days on market is not crazy fast, not crazy low. It's at 41.6, so a little bit down from last year, but not insanely. And here's our gross rent multiplier, where the we're at 160, which has pushed our trailing average up to 177. And of course, with gross rent multiplier and loan number is better for buyers, worse for sellers. And here's our cap rates. 5.26% in September. So we're still hovering around a 5 cap in our market. We've been on either side of that for quite some time. And this is what we're seeing active. So what's actively out there for fourplexes right now? How does all this data translate into what can people buy if they want to buy a fourplex? That's a real question. And this is a couple price drops you'll see. We've seen, we saw one sell last month after a price drop, but one did not after a price drop. And we saw a bunch of them hold steady on their prices, despite racking up some days on market. Yes.
Stacy, for the gross rent multiplier, most people are they selling based on existing rents or what people would like them to be?
Market or actual? Yeah, that's a great idea. Market, projected, right, or actual. This data is actual. I look at both, especially when rents were going up so quickly. You'd have such a difference between active and market rents. And so I run my pro formas. I just have a double pro forma and I plug in both numbers and then I look at both returns. And then I also like to verify market rents. You can put any number in the MLS. No one's policing that. And so I like to see at least one of the rents already be at that number, or I like it to pass my gut test, or I'll call Danielle. Danielle, is this a legit rent? What's the rent? Yeah. I mean, in some cases, you just got more than you expected on something, even despite the season in the pool. Okay, so here we have an active fourplexes in Canyon County, and I always try to see what I would get excited about if I were actively about to purchase a fourplex. And Bella looked good, but it's got closed property management with Johnson Property Management. That is kind of a hot topic. Do you want to be able to choose your own property manager? This data here is almost the same data as last month, so not a whole lot has moved except for Rocky Point and Surfers Point. Both of those were brand new fourplexes. One of them was to be built, so they were more than $1 million, but they have closed management and high HOA fees, but those HOA fees cover a bunch of stuff. So that's been a big question among investors locally in the Valley is, do you want something where you don't get to bring in any manager, where everyone has the same manager and you're obligated to use that company? Remember, we used to never have any 5+ units. There were very few. Look at all the 5+ units. So those have not moved as much. And so I had to ask myself why. So I was looking at your price per unit, just a quick math, price per unit on these. And it just seems like the price per unit on the 5+ is not giving you any economies of scale. So Idaho and its uniqueness, having many fourplexes, while it's accessible, while it allows normal conventional financing, it's also because the 5+ is a more rare product, or it used to be, there's just not the economies of scale. And then, of course, there's the rents. We saw that they peaked at about the 1st of 2023, and we've seen a push down. And so if you have experienced rent decreases, you're not alone. And so First Rate in their vacancy and rental market update, they've shared some really good data on this. And Danielle will also share her experience with Urban Edge Property Management, because of course she's not only licensed with Swope Investment Properties, but is part-time at Urban Edge Property Management. But here's some great tips that First Rate gave us. And I even had to abridge it. So if you want the info I had to cut out to try to be brief, hit me up after, write it on your feedback form. I'll send you the whole dealio. But they expect that the decline in Boise's rental prices to continue, that it will continue as long as the supply of new apartment complexes outpaces demand. So we've had a big glut of inventory coming on. We've talked about it here over the past while. We said it was coming, it's still coming. So that is pushing downward pressure on rent prices. With that, your property must show well. Good photos are the name of the game. First impressions matter. Taking this opportunity to really pay attention to condition. For a while there, it felt like you could rent a fallen down storage shed in North Boise and you'd have a line out your door to do it. That's not the case anymore. Marketing matters. Utilize all the mediums. So it's no longer just throw a sign up in front or just make sure it's on Zillow, Facebook Marketplace, social media, using virtual tours so you can engage the viewers who are surfing online and get them to kind of really delve into your listing. Also, maybe it saves you a trip if they're not interested, but highlight those unique features. Move-in incentives, $100 to $200 or $300 off the first, or $100 to $200 off the first 3 months rent. Anything to kind of make your listing stand out. And be appropriately aggressive on your rent price. And of course, when you're doing it, make sure your leases end in favorable times. Of course, First Rate will do all this for you. That's part of their services. And the main thing, the summary of all this is just staying proactive and adaptable and being on top of the market. That's their recommendation on how to get the most out of your rentals as you have these vacancies coming on in this cold, chilly, finally converting to fall season. Does anyone have any vacancies out there? Couple Northeast Boise vacancies. Where's yours, Dave?
So,
Fairview? Okay. And then are you doing any of these incentives or thinking about it or price drops or?
yeah, but that's one of the things I'm quite interested in.
Okay, all right.
And we've advertised it for 6 days, we still have it. That's not normal.
Well, 6 days also isn't very long.
No, but for us it is.
Okay, well, that's good. That's a good thing. And then if it does last on Zillow a little longer, change up some of your wording once a week. Just go in there and just find something to change. Mix up your photos, do anything. It kind of helps Zillow let it be fresh. Oh, okay. Well, I meant to do this slide next because we're talking about the rental market. So I'm going to confuse you and you'll have to go back. So that's it for me, guys. Thanks for listening to the AVID market update. I'm now going to introduce, well, you already know her, Danielle Costa, to give the Urban Edge portion of the rental market update. And she attended an amazing economic forecasting conference, and those things last forever, and there's nothing better than hearing the highlights. So take it away, Danielle.
Has good 4 hours.
Yeah, get 4 hours of data, kind of summarize into the takeaways. Yeah, definitely.
So it's kind of what we've been talking about, where vacancy is up, we're having to decrease rents, and I've just been being honest with owners of, hey, if you want it to move fast, we're not gonna get the same rents that we had before. So be open to those conversations. We've been talking about concessions, very important part, and it's in the marketing. We did $150 off. That was it. We got 3 leases that week just from having it in the special, marketing it appropriately. So you can start small. You don't have to go, I know people doing 10 weeks free. You don't have to go to that limit yet. Start small, what you're comfortable with, adjust the rent a little bit, and then redo your marketing. Make sure that your special is in the tagline. So that's super important. We have had so many lease breaks the last few months to buying houses. Interesting. However, at the economic conference, we were talking about, CoStar had said that interest rates are not affecting the rental market. That's kind of debatable from what we're seeing. I mean, one property, there was 15 lease breaks in 1 month just from buying a house. That is the most that we've seen ever. Granted, it wasn't my property, but that's the most that has been seen. So that may be a potential. Review what your lease and what your lease break options say to protect yourself. That's important as well. You are going to be a little bit slower, so same conversation. Make sure you're checking your renewals, you're checking your comps on what the price is in the market. Backing up to the economic conference.
Okay, question on your, go back
Yes.
to question on your thing. What does Urban Edge's lease say? Does it allow someone, if they want to move out, can they find their own replacement or do like lease takeover?
No,
Okay.
but I feel like our lease break options, some that I've seen investigating the market, their lease break fees are very high. Ours is $700, and then you just have to be available to let us show the property if someone is interested. Other property management companies are 2 months rent plus a fee, plus you forfeit your security deposit. So that's an option as well. And you're always paying until it's rented. So make sure that that's clearly outlined in your lease and that it's built.
Does anyone here have a lease break clause that allows you to find your own replacement? If you're breaking, or allows your tenant to find their own replacement? I've toyed with that a little, and I know First Rate has what they call lease takeover, where there's a fee charge for releasing, because it's still a pain in the butt and it costs marketing effort. But if you get the tenants actively involved in finding their own replacement, if it results in 0 vacancy, it reduces their fee, and so it kind of puts more, I guess, more hands on the job of re-renting.
And we did do that in student housing. It's very popular in student housing.
Oh, okay.
Yes. So they were responsible to find their own replacement, and then there would be a small fee. But yeah, subletting. So I feel like most companies don't do it, but it is a good option to look at. It kind of takes off that easiness if they have to find their own person. That way you're not taking the time to market as much. Okay, so I was very shocked by the economic conference, because if you guys saw the Swope news article 2 months ago from the same person from CoStar, it is actually slowing down quite a bit. Construction is slowing down. This is very good to see the absorption get back to normal, everything steady out, have the vacancy be less. We were originally supposed to have 6,000 units delivering in 2025. That is now back down to 1,500. Does anybody have properties in Meridian? Okay, so they actually said that Meridian is struggling the most with vacancy because there is so much built there. So that's something to keep in mind. I found very interesting. And we've been seeing this. We've been seeing vacancy be affected by all of these new builds. We've talked about it for months, so that's something to keep in mind. Good thing is it is slowing down. And then rent prices are actually expected to start growing back in 2025. So we're dipping down now, but it is projected once everything kind of levels out, that rent prices will be able to increase. Yes.
And what was the footprint of the conference? Was it Idaho or Boise or Western states?
So they did Coeur d'Alene, Twin, and Boise, well, Treasure Valley, but then they also had some graphs that were national level as well. So, and I'm happy to share those. So,
And what you're focusing on right now is multifamily, not single family.
correct. Yep, a little bit of both, but. And I've noticed in the single family world, our Meridian home struggling more than our Boise locations. But I mean, that's all just doing your research and knowing what things are renting for, keeping an eye on the ones that are on market.
I think they go from 1,500, from 6,000 to 1,500.
They're
Just not building as they expected originally.
Yep, not building, there's construction delays, financing concerns, so people are just taking it more steady. I think also a part of that is to help with the vacancy loss. You don't want to build a brand new complex and then still struggle with the vacancy. So I think that is why as well.
So to piggyback on Dave's question, does it seem like those starts are just simply delayed? Or is it unknown if they still will start at all?
I think it is a mix of both, because I have seen people that are just don't want to break ground yet, and they were supposed to. And then we also have, I've dealt with a lot of construction delays as well with new builds. I mean, one of the ones that are actually listed, I manage one of the communities. They were supposed to be delivered, the last row was supposed to be delivered in August, and we just got COO last week. So yeah, there are quite a few construction delays with certificate of occupancy. Yep, so we actually had to wait quite a few weeks for NAPA to go out there and authorize that. So that's also coming in to play as well.
And qualitatively, our general contractor works with a lot of investors typically. And he had space open up to take on our project because his investors sat on their land. They were supposed to build a bunch of stuff and they just decided to sit on it. And they also have heard the story about the inventory coming on and they wanted inventory. So they're like, yeah, maybe I'll just land bank it for longer.
Is that what's happening down there? Just near the river, well, across from the St. Louis Hospital. Very big giant area that I thought was going to be multiplex. Nothing good happened. That's what they expected something. It is an example.
Yeah,
When something develops.
I do have someone that's been sitting on land that wants to develop, I think 150 units or something like that. Been sitting on it for 2 years. So it's just, construction's expensive right now. And I think that is also delays, but also cost of construction. That's what's making it last a little bit longer. Yes.
How does the fact that Boise City is actually involved in competing with the private sector in building apartments? For example, the State Street in the old Smoky Davis site, and that gargantuan black structure on Orchard. I mean, as an architect, I think they're doing a terrible job aesthetically. They might be some bullish.
Yeah.
These people.
Well, I mean, we had Boise City we listed a trailer park last year. We listed a trailer park last year and Boise City was our buyer. That's now public information. I can share that. And so in that vein, they were an active competitor, an active buyer in the marketplace, a motivated buyer who's trying to create some housing and so the seller doesn't mind that, you know, their money spends the same. However, of course, the neighbors might wish it was someone with, maybe you should talk to them about their architectural.
I know what one you're talking about.
Go a long way.
I've had a lot of thoughts after last month's presentation by Boise City that arrogant. Not so worried about you, it's the presentation of arrogant. We get the developers to do what we want them to do. And what's the other famous thing you picked up on, you said,
Well, if you do what we want, you have to.
yeah, if we do what you want, you get an easier way to do the permitting
If you
process.
don't, so make sure. So I believe that the project that Boise City is buying now is focused on low housing and
Yeah.
affordable housing. And I think that the typical developer does not want to build low housing. It's not cost effective.
Well, and it's got strings, you know, in Idaho, it's like property rights. So we were just looking at a land and wondering how many, Leslie and I were just looking at something that could be developed, and if it was 4 units, it would have no strings, and if it was 6, it would have strings, and so, you know, it was a small parcel, but. And you guys, Terry, did you have some thoughts too to add at all? Or Dave, you guys were nodding.
We're in agreement.
Well, even the new chancery office down there, Western St. Mike, not St. Mike, St. John's.
No.
It's an office, and Boise City wanted to have housing in it.
Oh, yeah, on Chance
Mhm,
Street.
Well, I'll just go quickly through this one. This just was talking about the Idaho unemployment rate. Wages are continuing to rise, allowing tenants to afford increased rents in moderation. Somebody actually, she's the VP for Table Rock, brought up, well, they're building everything, but it's not affordable. And that's because they said that pricing was moving 5 times faster than what wages were. So that also is coming into the vacancy effect. Primary challenge with rentals is, you know, we need higher paying jobs that allow tenants to afford higher paying rents. And then we've been talking about it, Micron is going to bring a lot to the market. There are going to be a lot of building opportunities and renters coming in with that expansion.